Hi everyone, in this video I'm going to look at three EV stocks and determine which one is the best EV stock to buy now. Tesla stock versus NIO stock versus BYD stock. Tesla, the leading US EV stock, and BYD and NIO are among the leaders in the Chinese market. And so this is an interesting comparison. I'm going to look at five different metrics, starting with revenue growth. So let's get right into it. Tesla's revenue growth of 37.24% is down considerably from its peak of over 80% in the July quarter of 2021. Meanwhile, the same is happening at NIO. Its peak was in the 2021 in the middle of the January and July, I would say the March quarter at nearly 400%, and now its growth is more normalized at 25.36%. And BYD is actually accelerating its growth rate, rising to 103.8% in its most recent quarter. So growth rates are fluctuating and changing, accelerating, decelerating. Longer term, Tesla expects 50% annual delivery growth, and I'm not sure if it can sustain that kind of delivery growth longer term as its competitors like NIO and BYD are ramping up production, and others as well. They're all ramping up production. So it's going to be interesting to see if Tesla can sustain this kind of growth at its level of scale despite all this competition entering the market. The next metric I wanted to look at is operating profit margin over the trailing 12 months. And in this regard, I've been saying for a long time on my channel, well, I've only had my channel for like 6 months now, but throughout that entire time, and I've been writing articles on the Motley Fool for several years now, and I've been saying this for the entire time I've been following Tesla stock, which has been, you know, 5, 6 years now, that they've done an excellent job expanding their operating profit margin as revenue has grown, right? So they've gone from less than 5% operating profit margin all the way up to 16.98% operating margin, and they've persistently climbed upwards as they've added scale, right? As they've expanded operations, as they've grown revenue, as they've gone international with their manufacturing facilities, all of that, it's helped increase its operating margin, which is not an easy thing to do. NIO, meanwhile, was making great progress in achieving a positive operating margin, and then it kind of flatlined in July of 2021 and has turned downward. It's still at negative 26.24%. Of course, NIO is choosing a different battery technology. Instead of having charging stations, with NIO's cars, you can go in and swap out the battery, get a battery replacement, and be on your way. So for consumers, it's more convenient to switch it out rather than charge because it's just faster. It'll be interesting to see if that, because of that reason, NIO gains widespread adoption more so than Tesla. That remains to be seen. And BYD also was making great progress in its operating margin, rising to over 8% for the trailing 12 months before declining downwards, and now again making progress back upwards at 4.34%. Still, uh, out of the three, Tesla is way ahead in terms of operating profit margin at 16.98%. And I would say this is a more important metric than revenue growth, right? The operating profit margin. The next metric I wanted to look at is cash flow from operations. And again, Tesla showing nice growth here, nice expansion, 3.278 billion in cash flow from operations in its most recent quarter. NIO also showed nice growth here at 51.86 million cash flow from operations. And then we don't get data after January of 2022. And BYD cash flow from operations fluctuating, turning negative with gaps here in the data, and then negative 6.533 billion in its most recent quarter. So again, with this metric, Tesla widely in the lead here and showing a nice trend upward. The next metric I wanted to look at is net income over the trailing 12 months, and Tesla again showing its performance advantage growing its net income from close to negative 2.5 billion all the way up to positive 12.58 billion. Meanwhile, NIO going in the opposite, going in the wrong direction from an $800 million loss in the trailing 12 months in 2019 down to 1.64 billion in the latest update. And BYD showing impressive expansion exponentially, going up to 1.477 billion in the trailing 12 months of the most recent update. So BYD is one to look out for here, expanding its net income exponentially here. I'd like to see this turn into positive cash flow from operations before we start to make any meaningful conclusions from this metric. Finally, I wanted to compare these three on valuation, looking at price to sales, and Tesla at 8.875 is the most expensive compared to NIO at 2.526 and BYD at 1.654. So to answer the question, which one of these three is the best EV stock to buy right now, I'm going to say Tesla is the best one to buy right now. Of course, it's way more expensive than the other two, nearly 4 times more expensive than NIO and nearly 5 times more expensive than BYD on a price to sales ratio. But I would say that Tesla has earned that premium valuation. If you look at its operating margin, if you look at its cash flow from operations, if you look at its net income, I believe it's shown that it deserves this premium valuation. So there you have it. That's my best one to buy out of these three stocks here. As always, I truly appreciate your viewership. Thank you for watching, and I'll hope you come and see me again next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.